you're obviously a very experienced operator, and so raising money is what you do, right? But for somebody that's not as experienced in that market, what could I do, right? And so there's a lot of opportunities. I think there's more opportunities now for somebody that wants to work hard. Like I pay attention on YouTube and I'm watching these shifts of like, what can you do? I mean, you can go out today and you can start your own business. You could start a junk hauling business. I mean, it doesn't have to be anything fancy. There's people that have owned junk hauling businesses. They started with one truck and now they have a multi-million-dollar business. I mean, it just doesn't matter. It's just, you have to be able to work hard and solve some kind of problem.
We talk about how to raise money legally. Our investors, family, friends, people can invest money, and now you could buy a cash flowing business. It could be laundromat, could be car wash, could be storage units, whatever, or franchise, or any business which is already operating in the senior living assistance. That's beautiful. Could be home health care, which just like you said. Hi there, everybody. This is Vinney Chopra and Beau Eckstein, Vinney and Beau Show. We come live to you 9 a.m. every Friday, Pacific, and 12 p.m. Eastern Time. Today, we're going to have a fantastic show. Actually, business building strategies we're going to discuss for 2023 and beyond. What's really moving the needle? Taking action during uncertain economic times. As you know, the stock market is crashing like crazy. Somebody told me this morning, maybe next 2 months may be very, very unruly going on in the stock market. What's the mindset of investors and us and everybody? How are we going to behave? And building resilience. All that along with, brother, Beau, what other things are we going to talk about?
Oh, we're going to talk about always be promoting, always be networking, always be meeting new investors and partners. Also, we'll talk a little bit about repositioning assets. What assets are we selling right now? What are we looking to acquire? And then what are emerging markets and trends, and much more. So we're going to get into a lot of details today. I also want to quickly say, I was listening to one of my friend's podcasts, and he just recently read one of Warren Buffett's books, and kind of these are the cliff notes that I got. It says, number one, these are Warren Buffett's strategies. Number one, never live on one income stream. That is so true, right? We got to have multiple income streams. Yes. Number two, focus on investing on cash flowing assets, such as things as like investing in syndications, investing in cash flow rental properties, things that pay dividends and so forth, right? We want to go into compounding effect through cash flowing assets. Number three, one of the most important things is invest in yourself. Are you putting yourself through courses, through mentoring programs? That's the way to really speed up things and learn from the best. Read books. And number five, dry powder is gold. So always having the ability to have dry powder, never putting yourself in a financial stressful situation. Because when we're financially stressed, we get into like a little turtle pose, right? We get stuck. We don't want that to happen. So anyways, thought those were good little nuggets there.
Yes. No, that's so true. So, what's really moving the needle right now? Again, we are finding that a lot more in real estate, because we are in commercial real estate and loans and other things, that the tightening of the belt in getting loans now, you know quite a bit more about it. I know construction loans are also getting harder and harder. The banks who were giving construction loans, they are increasing their interest rates. I couldn't believe it. I mean, they're just bumping it up by several points. We used to get like loan for 1%, financing fee. They're charging 2%, 3%, 4%. Tell us more about it.
Definitely tightening. I had one of the members of GoBundance came to me, and I met him at one of the last events. He's newer into GoBundance. He's very successful. And he just last year, he bought a office building, commercial office condos, and he put his company in, and he paid all cash. And it's a small deal. And so he went to a local bank, and the banker he first was dealing with quit. Another banker quit. And so he's been dealing with this bank for 5 months, and he's finally given up. And he needs to redeploy this money, right? Nobody wants to sit on cash on a property. So he's like, Beau, I know you can place deals, and like it's a really small deal for a commercial deal. It's like 500 or 600 grand, right? Like I don't really necessarily love doing that because it takes a little bit of effort. But sure enough, I packaged up the deal and I found a community bank for him relatively quickly. Now he wanted 80% cash out refinance, and I'm like, 70, 75. The community bank, I ended up meeting the president of the bank. It's a smaller community bank. We had a phone conversation. He's like, this is what we'll do. I relayed the message to the client. Hey, 70%, this is what you're going to get. It's a relatively good deal, pretty low fees. Mm-hmm. So there's a lot of there's a lot of money moving still. It's just very tight, and you just got to know how to talk to the bankers. You got to know how to position your loan file. And also too, when you're dealing with construction, it's a whole nother beast. So construction in itself is going to be tougher. So they're going to look at like the experience. They're going to want to see more equity in the deal. But yeah, I'm seeing a lot of big deals cross my plate. I'm seeing a lot of bridge loans that they're getting stuck, and they now are on, let's say it's multifamily deal. They have to go bridge to bridge. That's not a good sign when you can't execute your plan. Now, they had eviction moratoriums and stuff, so that's kind of what slowed up these guys. So I'm looking at helping these guys place like a $37 million loan right now, which is going to be extremely challenging. Wow. But what I've done, Vinney, and part of, I think, our discussion is I use technology to help me place debt now. We have platforms that we work with that I put in the state, the location, the criteria. It helps me identify the banks to place the deals with. And then also knowing from the start, what kind of deal is this? Is this a CMBS deal? Is this going to be a bank or credit union deal? Is this going to be a non-bank type of deal? Is this a deal? A lot of people don't know there's a lot of tax credits and bonds you can get, but that's very complicated to put in the capital stack. For example, some markets, if you're building new construction or affordable housing or potentially assisted living facility, there's new market tax credits you can get. There's 501 bonds you can get, and so that's how these developers they layer in bank debt with bond financing with new market tax credits, right? That's how these people are doing these $100 million projects. Mm-hmm. So, but I am seeing a lot of deal flows. My friends own a consulting company, and they were sharing some of the deals they have in their pipeline, and it's pretty amazing. There's still a lot of buying going on. I see, 67. These guys are doing $60-70 million deals. Like they're getting them across their desk. So there's a lot of money out there. A lot of these developers, the $100 million net worth type of guys, they're buying all sorts of asset classes right now. So I would say that it's all about positioning, and if you can bring in new equity into deals, you're going to crush it right now. So it's all about going into some of the things we're going to talk about. Is always be networking, always be promoting, always be educating investors, because there's a lot of dry powder out there. There's a lot of money that's sitting in banks making a very little return, where that money could be deployed into certain asset classes. And Vinney knows that better than anybody else. It's all about OPM, other people's money. And so what you do is there's a need, right? There's a need for these limited partners to invest their money with a reputable syndicator. So the problem right now too is syndicators are getting a little bit of a bad name because there's a lot of them that haven't performed. So I always say you got to look at the track record. Go back and look at how many syndications have they done? Did they just get in this business 2 years ago and they're all in bridge money? Those might not be the syndicators I would want to personally invest with. So I think there's lots of opportunities. I think there's a storm to be weathered. Banks are being conservative right now. When they tighten up, it actually is going to force more of a recession, right? If there's no lending, it's going to make it tougher. So it'll be interesting times.
Very, very interesting time. Very turmoil. And I know the sentiment of, this inflationary measures in USA, how Fed started increasing rates so many times last year, this year, they just did it. And again, I find that, the oil went up. I mean, the gas has gone up, which is going to bring inflation higher. It had come down. So it's turmoil. I don't know what the stock market is today. I don't know. This will be published next week. Well, it went from a negative to a positive stock market, which is a good thing. But the key thing is that we need to be always looking at where to pivot and how you could come out of the red ocean, I call it, to the blue ocean. I know we have talked about it, where there is a little bit less competition, like hospitality in my case, and also assisted senior living, even though we have some projects which are kind of not completed yet because of the financing from the construction financing. We took the equity and built it up to a certain level. And now we did get one bank to give us a little extra money because the cost of goods went up. The labor went up, right, Beau? So we are finishing up the Williamsburg, Virginia project in about 2 months and opening it up. It's delayed by about 9 months, 8 to 9 months. So other people are also finding that too. But you got to stay the course. You can't give up. That's the big thing. But some syndicators who don't have the, dry powder or money on the side and so forth, they are in trouble. So you got to be careful.
That's a great point. That's why you want to know when the going gets tough, does that syndicator have the pockets and the bandwidth to see things through? Because I'll tell you what, there's always going to be issues. There's always going to be problems. I talk to people every day and there's problems, and I'm dealing with it when I'm trying to close loans. There's environmental issues that pop up when we do a phase 1 report. There's always obstacles to overcome. And that's the point too. If you're going to invest with somebody, you want to know that their number one goal is to protect the investor capital, right? That's the number one thing I would be looking for if I was, right? Yeah.
1000%, brother. And, I have mentioned it on the live broadcast and otherwise to our Atlanta property, how my wife and I spent almost $2.5 million of our own money. And you gave me the loan. Hold on. You got me $8.5 million loan, brother, in 15 days. I've never, ever, ever heard about loans starting today. They met with me for lunchtime, I remember, the group from San Francisco. They flew that night. They had already booked the flight, thanks to you, really, Beau. And an $8.5 million loan at a very reasonable cost, too. I couldn't believe it. And they were able to complete it on the 15th day. And they did all the reports and everything. You were a miracle. How did that happen?
I've been doing that.
They might need you now.
I've been doing that my whole life. And it's just, trials and tribulation is really, because I've been in lending for 25 years. So like I have this deal, and for whatever reason, I had it approved before, and he ended up going with bridge financing, which was fine. He's worked with the same mortgage broker for 15 years. So he got introduced to me. And so I had an SBA deal lined up for this guy, and he ended up doing bridge money. And then he called me when he's about to open up the facility. And he's like, I should have taken your SBA loan. And I'm like, yeah, well, nobody had a crystal ball. We didn't know rates were going to spike. So then, but before he called me again the second time, he went back to the same broker. She shopped his deal. Literally, I got the list, like over 80 banks. And she did it the wrong way. So when you're looking to place debt, you don't want to shop the right way. And especially on SBA 504 deals, it's 2 loans. It's the first loan is the bank loan, the second loan is the SBA guaranteed piece.
Yes.
The important thing on these tougher deals is to get the SBA underwriting approved, the second loan approved first, then take it out to the market. So it was done improperly. And now I will get the deal done. But the point is that it's these relationships. It's really staying the course. And what I've realized is there's really thousands and thousands of lending institutions out there. Yeah. And it's how you approach these, like how I approached the guy at the regional bank or the community bank. And I'm pretty confident he's going to do my friend's deal. It's just the way I present the deal, and I know how to talk the language. So like if you're just shotgunning your deal out there to like every single bank, it may have worked in the past, but you got to be more strategic. When the lending environments are tight, you got to be more strategic. So at the end of the day, not to toot my own horn, but a good broker or advisor, they're going to help you. And they're going to help you in a lot of ways. Like I had a client just buy a building, and he sells electric vehicles. It's his new business model. So I helped him get the startup loan to buy the building. Then he called me and he said, hey, I need some financing. So I referred him to a floor plan financing company, so they'll finance his cars that he's putting on so he can have more inventory on his dealership. Then he says, hey, can I get some more working capital? I go, hey, do you know what a cost segregation study is? And I go, did you file your 2022 taxes? He didn't file his taxes yet. I'm going to save him $200,000 instead of him stroking a check for $200,000. he's going to have the write-off with this cost segregation. So the consultants in your life, the people in your life will be a big moving point, and especially in trying times. That's when you need the best of the best in your pocket at these times.
I totally agree with you, brother. I mean, it's so important, so very important that we have the right loan brokers, right realtors, right brokers in commercial or wherever you are doing to build that relationship. It's so important. I'm so happy to say that I got a $50,000 cash flow check from my property management company in Knoxville, Tennessee. Why? Because our interest rate went to 7.96%, almost 8%. It used to be 4 point something. But then I locked in Freddie loan through my very good friend Meridian Capital. You know them too. Mark Pena. Shout out to Mark. He got me locked in at 5.61 for 10 years. 5.61 just a few months back. And now the property is cash flowing again. I love that. I love that because our mortgage had gone from $35,000 to $72,000 per month. So all the cash flow was going to the bank. So, there are a lot of people who are in this situation.
Insurance premiums have skyrocketed.
Oh,
I mean, I know personally that's crushing people. Like I know like premiums that went up like over $100,000. So they were paying X amount, and it was a Texas deal. His premium was going to be $120,000 higher the following year. So you got to be. These are the things that you're not really suspecting that come in, and then that could wipe you out. So you have to be resilient. You have to have the bandwidth. You have to be able to figure out how to solve the problems.
So true, Beau. Actually, it was one of my main topic of my coaching on Wednesdays. As some of you might know, I coach at 4:00 p.m. Pacific to 5:30. I've been doing it for 7 years now. 7 years, myself coaching, and it was brought up just 2 weeks back that the insurance rate went up more than the mortgage for the month. What? The insurance went up 300% for this particular investor who has been my student, and I was talking, and we had a great discussion on it, talking to the bank who's got the mortgage, figure out ways so that they don't foreclose on you, because they are not in the business of owning real estate. I mean, you got to really reach out to them and share with them if it's principal and interest, to maybe reduce it down to only interest, or maybe even a percentage lower that, so that the tough times pass, as you're increasing the rents and transferring some of the insurance money to the rents, right there, because you can be very open to the residents and tell them, hey, this is the dilemma we are in because of insurance going higher. Of course, taking a bridge loan, we were talking, taking another, cash call was another way to do it, because investors don't want to lose that. So you want to be as transparent to your investors as you can be, to share with them what has happened.
Yeah, it's crazy. So you just got to be prepared. And that goes on what we talked about, building resilience, right? Like these things are going to happen. And so you can, some sponsors would bury their head in the sand because they're not used to dealing with like this much stress. The real key is just everything is figure outable, and everything is, and real estate is probably the most forgiving asset class. If you can weather the storm, you're going to be fine. It could be a few months, it could be a year or two. It's just being able to weather the storm and figure out how to weather the storm.
You're so right about it. So right about it. I want to reiterate that again. If you're dealing with some sponsors and, promoters who has taken your money, you don't want to lose the money. So, stay the course, communication, everything. Just like you said, it may take 6 months or a year to weather the storm, but stay the course, because some foreclosures, if they will be happening, there was some in Houston, I know. I'm hearing about Austin a little bit. But the big thing is, you don't want to lose your assets. So, the initial investment. So work with the syndicators. Many of the syndicators, by the way, myself included, we have stopped the distribution. I gave distribution on 3, I think, properties, but some which we are selling, of course, we stop the distribution. But also where we feel there is, like in the Houston market, with the insurance going higher and this and that, we also stop the distribution in that asset. It's a B plus A minus asset, very beautiful asset, but we are explaining to the investors why we are doing it
that's
so
good.
that they could
That's
stay.
very good points. I think that's what people want. People just want communication. So I think, if you have investor capital, you need to just communicate messages to them. And then, it's, even though it's a little painful to have to bring up those difficult conversations, you're better off in the long run because, there'll be advocates for you for helping navigate, like, hey, we're still cash flowing, but we're going to hold distributions because we think insurance premiums are going to skyrocket based on what's going on. Okay, let's talk about, what do you think the biggest emerging markets and trends that you're seeing, kind of like from a global standpoint, from a real estate standpoint? What's your mindset going forward?
The trends are, again, with the demographical shift happening, as you know, we are aging. 10,000 baby boomers turning 65. They are going downsizing. They're also moving from New York. I just saw statistics from New York to Florida. How many people moved? From New York, again, or the north side, the colder states, as people are aging, they're moving to the Carolinas, Raleigh, Durham, Winston-Salem, all those areas over there, South Carolina. And then I think a lot of people are flocking into Texas still, even for retirement, and Arizona, which is again a warmer. So that's the demographical shifts which we are finding. In Utah also, Utah is
actually Las Vegas too. We're seeing.
Oh, I shouldn't miss that, brother.
Yeah, Las Vegas. I was just reading an article on Redfin. The number one most searched market right now is Las Vegas for residential real estate. So there's a shift coming here. We have huge infrastructure, just like in Atlanta, how they got the movie industry. I believe we're going to get the movie industry here with the tax credits, Nevada. We've got MBA coming, $10 billion resort. We've got a high-speed tram coming from LA to Las Vegas. So follow these trends. So that's what I'm looking at. I'm looking at, Las Vegas is a good market. What asset classes pencil out today, or what could I be watching? And I've been a real
assisted living, senior assisted living. That'll be amazing. I know you and I talked about it, Beau. So we should dig deeper into it then. I know we were in Scottsdale, near to Arizona, in that Scottsdale area. We want to definitely. So Las Vegas is next door. So we should talk.
Yeah. I mean, my mindset is my idea would be to cater to the aging demographic, and that could be some sort of home service type businesses that help seniors, non-medical senior care, a platform to help people, because some people are aging in place and they want to stay at home, right? Some people it's not viable at some point of their life. They have to move into some kind of care facility. But I would cater to that standpoint. I like that. And I think it's very low overhead compared to, senior care. And senior care is a little bit more competitive. So you need a lot more equity, a lot more money to buy these big facilities. So there's huge opportunity, right? Like, you're obviously a very experienced operator. And so raising money is what you do, right? But for somebody that's not as experienced in that market, what could I do, right? And so there's a lot of opportunities. I think there's more opportunities now for somebody that wants to work hard. Like, I pay attention on YouTube, and I'm watching these shifts of, like, what can you do? I mean, you could go out today and you can start your own business. You could start a junk hauling business. It doesn't have to be anything fancy. There's people that have owned junk hauling businesses. They started with one truck and now they have a multi-million-dollar business. I mean, it just doesn't matter. You have to be able to work hard and solve some kind of problem. So
you hit the nail on the head. Beau, you came into the academy, inner circle, mastermind 2 weeks back or so. You are so good in explaining franchising and how a lot of people with very little money, you could really own this business and you could actually own the real estate and the business separately. So you don't need to own the real estate, own the business. And that is so important because in my education, I just am putting a little plug there. We talk about how to raise money legally so that our investors, family, friends, people can invest money. And now you could buy a cash flowing business. It could be laundromat, be car wash, could be, storage units, whatever, or franchise, or any business which is already operating in the senior living assistance. That's beautiful. Could be home health care, which just like you said. And there are so many different avenues. So, if anybody wants to join, Beau, please reach out to him. I know we will put some links at the bottom. And if you want to, DM me, if you're in the social, you're looking through this or watching this, DM Beau to reach in his circle. And for me, DM me. And you could come if you're an accredited investor. We are having $100 million fund in senior assisted living and $100 million in the hospitality side to fund 506C. I can advertise and talk about it. It's a accredited investors only fund, and thank you so much for really spending time with us. Beau, any
I just
other comments,
now we're
brother?
using Riverside. Yeah. We're going to put out higher quality videos. We're going to post archived all these on probably the Vinney and Beau Facebook page, so you can go and watch these. We're gonna take bits and chops of some of the nuggets that Vinney and I drop, and we're going to share those with you. And we're going to bring on really good guests, and we're going to really dive deep, I think, this year going forward on business opportunities, on investing, on mindset, even more so. We're going to bring in guests in all sectors to educate us in things that we might not know about, that we might not be investing in.
Sure.
We're going to bring in operators that, do lots of things in the business world. So our minds as well as your minds to different opportunities, and we'll keep you abreast of what we're doing, right? We're always looking for deals, and we'll make some unconventional investments sometimes into people and businesses. I think that's a good opportunity too. I think you should diversify and help other small business owners get ahead. So that's the way I think.
I would love also to appeal to influencers or specialists in your field. If you want to DM Brother Beau or myself, if you want to be on our show, we have a qualification process. So please go ahead and apply and let us know what you could share with the audience. Is that if you not to sell just the service, but educating, our clientele, our followers, and so on, so that we can bring great information for them. And in consequence,
thanks everybody, and thank you, Vinney, for another beautiful Vinney and Beau show. We'll see you on the next one.
So happy to be on your show finally. I'm a long-time fan, and I watch all your guys' content. It's awesome. We're very, very, very invested in our community.
It's wonderful to be here.
This is Vinney Chopra and also my good buddy, Eckstein. And we are so happy.
It's amazing what's going to happen. So, we ramped up to do the show, and we got a lot of hype about the guest today, so I'm excited.
I know. So excited to come live to you all